Well, hello there. Charles Davis, approved by Charles here, talking to you about credit reports. Make sure you like and subscribe. This is an actual credit report. I have redacted all the personal information, but I thought I'd go through a credit report of what a loan officer sees from the credit report perspective and give you an idea when we look at your credit, what we're looking at. So this particular borrower had some really great scores, 748, 707 to 740. With mortgages, we use the middle score. So in this case, the qualifying score would be 740. If there are multiple borrowers, we use the lowest middle score. So if there are two borrowers and the other borrower's lowest middle score is 738, we would use that. Next line is pretty interesting. It says potential score improvement 33, 20, and 32 respectively for Experian, TransUnion, and Equifax. The loan officer has the ability to go into that file and play with some scenarios of what could be done to improve your credit score. So that's things that we're able to see and kind of provide some guidance along those lines. I'm going to go on to the next page here. This is called a merged report. Merged report because we are pulling all three credit bureaus, Equifax, TransUnion, and Experian. In this particular scenario, it does say which model they're using. Equifax is using the FICO Classic version 5 FACTA. The TransUnion is using the FICO Classic 04, and the Experian is using the Fair Isaac version 2. That's why the scores are different. The way they do the scoring based on the model is different because their models are different. So that's why the scores come up different. It's very rare, almost impossibly rare to see somebody where all three scores are the same. One of the things that I do want to point out here is on the left here, these are potentials for improvement right there. So if you notice on each one, at the 10 level, 10, 10, and 10, says proportion of balances to credit limits is too high on bank revolving or other revolving accounts. So what that means is if we have the borrower pay down their balances on some of their credit accounts, specifically their bank revolving or other revolving accounts, to a reasonable fashion, which is 30% or under, we could get up to a 10% score improvement almost immediately. So somebody that's 740, that's 7 points. We can get them to a 747. Now, in this particular scenario, not going to help them a whole lot because they have really good credit, but somebody who's just kind of very on the precipice of being able to qualify, those little changes can mean a lot. So we're going to go through the next thing. This line here is B for borrower. So this file has one borrower. This will be B, or J for joint, or C for co-borrower. And this is a single borrower, so we shouldn't see any C's, although we might see a J or two. So we're going to start going through this, give you an idea. So this particular borrower had a current mortgage. It was a refinance with Mr. Cooper, Nation Star. Give me the balance, give me the terms, give me the minimum payment. It says that it's as agreed and has no lates. Any lates will be sitting right here and will be in red. Red's bad, as you can probably imagine. So that's that one. That's obviously current mortgage. We would pay that off as part of the refinance and go from there. Again, this carries over from the previous one. This data is pretty long, so you can see it's 1, 2, 3, 4, 5, 6 rows of data, and it shows essentially 1 year's worth of transactions across these columns. Scheduled payment, actual payment. There's very good information. It will tell me that if you're making extra payments, in this case, the borrower does pay a little extra every month, which is fantastic. Next loan's an auto loan. Again, a B for borrower, single user auto loan. Shows what the high amount was, what the current balance is, and what the current payment is. Also will show if there's any lates. There's none here. And will show the balance going down, which is fantastic. Care credit, again, it's a credit card. It shows that it has a limit of $10,000. Currently has a balance of $9,947, which is pretty high. Minimum payment, months received, minimum payment is $324, months received, etc. You can see all this data, again, no red. We're going to scroll through these. It's just my Citibank flexible spending card. Same data, same information, no reds, which is good. So at some point, we start kind of browsing, not necessarily reading specifically. Once we get down to here, you see these accounts are all closed. These are paid or transferred. So this is a Freddie Mac, so that was a mortgage that was bought or sold during often mortgages get sold to different servicers. And so this is obviously Aurora Bank had the mortgage at one point and then sold servicing rights to somebody else. Bank of Credit, that was a revolving account. Oh, good thing to point out here is on these is MTG is mortgage, obviously. REV is revolving. Revolving is like a credit card, line of credit, that type of thing. Let's go up here to the car loan. It says auto loan right there. So, we get a lot of information just kind of going through this pretty quickly. We know you have a mortgage, we know you have auto loan, we have a bunch of revolving debt accounts. The other one is INST or installment. That is also like a personal loan or a loan that's not for an auto but is similar to that. Or if you bought some furniture online but they didn't give you a credit, you just got a loan for that amount, etc. So I'll show you those things. A lot of information, again, no red is good. And we keep going down here, paid as agreed, paid as agreed, paid as agreed, means that it's been paid by the borrower as expected. No, nothing's happened. But we get down here, and again, we have borrower, we have a 1 here in the 30-day column for lates. And it says down here that was late in May of 2013. 30 days late. So this particular borrower has 1 late in May of 2013, and it was a 30-day late. J is joint. So you can see joint. This is for the borrower and joint. We don't know who the joint person is. No information about that on the credit report. But we show that this particular account was late 3 times, 60 days late, and in September of 14, August 14, and July of 14. So that will give you kind of, there's obviously lates can pull down a credit score. Same thing here, a joint account for Navient. Navient is a student loan provider. It shows you the late dates, lates were the same time. I would suspect by looking at this that whoever the joint person is on these student loans were the person responsible for making the payments, and for whatever reason they did not. Also, here's another loan type, EDU, for educational or student loan. And then it's just scrolling down, no other reds, all these as paid, good accounts, no collection accounts, no credit history, no anchor, no public records. Public records would be if you had a bankruptcy, if you had a foreclosure, if you had a deed in lieu, where basically the bank takes back your deed, short sale, those types of things would show up here. Obviously, there are none. This is a very informative page for us to look at. So what we can see is your trade summary. We can see of the current accounts. These are the current open accounts. High credit, mortgage, balance counts, payments, auto loan information, revolving credit information, total. It gives you a very good summary of where their credit's at. It gives us a good tool to look at if we review all that. A lot of lenders won't go all the way down through the credit report like that. They don't really need to. Blacked out all this, but it shows there are, obviously pulled, it's a tri-merge report, so we pulled all 3 bureaus. Down at the bottom is very interesting, is if up above there are some creditors that had a pockmark on something, in these sections, the contact information for that particular line of credit, whatever that is, will be listed here. And so what I often do is if I see something that looks like, hey, this should be fixed with a simple phone call, is I will go through and I will screenshot this little piece here, copy and paste it along with the account information from above, because this has the account number, or at least partial of the account number, and email that to the customer. It's just enough information that they would be able to contact the creditor to have something fixed, changed, if it's a mistake, corrected, etc. But a lot of contact information on here for all the creditors. So in case they need to contact somebody, standard credit report does, it reports to the credit bureau that we did a poll, and B, it has a list of all the credit bureaus. So you are able to request copies of your credit reports. And so down at the bottom, it does say the full address, phone numbers for each one of the credit reporting bureaus. Again, another page with good summary information. And then down here it says credit score 740 was from Equifax, and this is what they use, the FICO Classic V5 FACTA. So there's that piece of information there. There's also a page on the last few pages which tell you that you'll get a copy in the mail. Is that notice to the home loan applicant, which is you in this case, or the borrower in this case. Which credit scores were used, what issues that we're seeing, why or how it affected the credit score, and things that could be done. Some other summary things at the end, and then there's a couple of, if there were credit checks, this is a consumer explanation letter. So if you are applying for a mortgage, the lender may ask you to provide an explanation as to what happened. Why was this particular loan late, 30 days late in May of 2013? And just write whatever the explanation, short and simple, sweet. Write it in there and provide that. Same thing with this one. Why was this one late? Same thing with this one. Why was this one late? Write those out, sign and date it, and provide it to the lender. And that goes into the file, and that can be used as positive information for you to argue what's been done. The other thing that often shows up on the credit explanation letter is when you have additional credit pulls. So these are down here, public inquiries in the last 120 days. So if you bought a new car, new stove, or shopped at a different mortgage company and they pulled your credit, it would be listed here. And then again, what the lender would ask is, what was the inquiry for? Did you take on any new credit? And you would check, this was for a new fridge. Yes, I did. Or no, I did not. Easy peasy. But that gives you a good idea of what lenders look at when they see the credit score. This is what the credit report looks like from their perspective. So they're able to see information, and then this is imported into the loan origination software or loan origination systems that are used to determine your qualifications and provided to the lender for them to consider and give you a loan. So anyway, hopefully that is very informative for you. It's a lot of complexity of credit reports. If at any time you have a question about that and you're working with me, I will snip sub pieces of this and provide it to you, and hopefully provide some answers to you. What we cannot do is we cannot provide you a copy of the credit report. That's not allowed. There are ways that, for instance, if you work with me, you can pull your own credit with me. I get a copy of it, and then you can get a copy of it. But the mortgage pulls are a little bit different than the consumer view version. So just so you know, if you have any questions, don't hesitate to reach out. Comments below if you like and subscribe. I'd appreciate it. And you have a great day. Thanks. Bye.